What's up, traders? It's good to see you. I'm excited for today's video. I'll be honest with you though, I've been sitting here for like 20 minutes trying to do the first take to just get this thing rolling. And it's crazy to see how after not filming for a week, not even that long of a period of time, I'm a little rusty. So I appreciate you being here. Bear with me if I stumble over a few words. I'll make sure to cut it and edit it and make it look pretty. But I want to get this information to you. What we're going to do today is look over about 7 or 8 different currency pairs. And we're also going to touch on Bitcoin because I think that's probably one of the more pressing things that I've seen that I want to show you. And then I also want to acknowledge the fact that SPY is at 420 and in an hour the market's going to close for a new all-time high. So it's interesting as that happens that I'm seeing a ton of content on Twitter about people saying we're headed for a correction, choppy markets ahead, choppy. New all-time high doesn't sound like choppy markets to me. So we'll look at the chart here in a minute, but before we get into that, something we're going to discuss in detail today is the ASFX systems. When we get to the Forex pairs, I'm going to specifically show you the A1 and D1 entries that presented. There's one more ASFX system, the D2 entry, but we're not really looking at that since I didn't find any D2 ideas this week, at least so far as I've been doing the backtesting. The system is really important. And I don't want to linger on this because I know a lot of you guys are already in ASFX or you know what a system is, but a system is just, simply put, a set of rules that you're going to follow when you come to the desk, a set of rules and questions that you're going to ask yourself before you take a trade. And that set of rules actually can be back tested, meaning you look back at previous price data to see if that set of rules has been profitable in the past to determine if it will be profitable in the future. So for me, after not trading all week, it's now Thursday, I need to go back Monday, Tuesday, Wednesday, and then Thursday as well to see all the entries that presented. Because what can happen over time is trading systems, their profitability can change. And if you're not forward testing, meaning keeping up with the markups like I'm doing here, then you won't know when the profitability changes. It's impossible to trade every entry signal that presents in line with your system. It's just impossible, at least for me and most other humans that I've worked with. Normally, you find within that system the highest probability trades and you look to take those. But today we're going to talk about a few lower probability trades that I still mark up, I still put into my backtesting data because I want that to still be included as a part of the system because it still is technically an entry signal. Now, again, I know some people that are brand new to trading are like, what the hell is this guy talking about? Maybe you should watch some of my older videos first before you jump in here today, but try to follow along. It's not that complicated when you really break it down. So first, I just want to, again, acknowledge SPY today at 420.42. This is an all-time high here. A lot of people, like I said, on Twitter have been talking about consolidation is ahead because of, potential tax hikes and all these other variables that people always want to throw at the market. And the way that I like to look at things is just by reacting instead of forecasting. Reacting tells me that we've been breaking for new highs for the last, month or two at least. And if you were to look back all the way to the coronavirus crash, if you want to call it that, we're actually up almost 100%, 92% up from the bottom. So it's interesting that as we're breaking for new all-time highs, people are like, oh, get ready. The pullback is coming. The crash is coming. I don't think that's the way that we should operate as traders. We should read and react, not forecast. So we have to give acknowledgement there. Also, we'll take a look at Bitcoin because I think it's important. If we're looking at this here, again, on the daily chart, I sent this out on Twitter probably a week and a half ago, signaling that if we broke the 50 EMA, we could see it move down to 38K, 40K, near the 200 EMA. It broke the 50. It's retesting the blue 50 EMA as we speak and actually coming down off it. If it uses this 53,000-ish, 52.5 support level, if it uses that as support to come lower, it's going to have a hard time, in my opinion, breaking back up before coming down to at least 40K. So it's important to get this out to you guys since I know a lot of you guys trade Bitcoin. Notice the bearish divergence. We've been talking about this. And when we see bearish divergence and multiple breaks of the 50 EMA, it normally is a sign that change is coming. So that's the most important thing I want you to see on Bitcoin right now is that if we cannot get back above 53,000 in the next couple of days, we're most likely headed towards 40,000 quickly. So just keep that in mind as you're looking to actively trade Bitcoin. Another important thing as we transition into the Forex pairs, GBP-JPY has had an unbelievable week. If you were to look at this going back into Monday, right here, from Monday's low to today's high, it's up 1.92%, which is a pretty substantial move for a currency pair to make in 1 week. Normally, these things, as you can see, are moving 0.03, 0.3%, 0.5%, 0.2%. Not a lot of movement day to day, but GJ has had a strong week, and that's set up a couple of buying opportunities. So the first thing I want to talk to you about is this buying opportunity here in the Asian session last night. Now, we're going to get into the ASFX signals here. If you don't understand what I'm saying, click the link in the description. Consider taking our courses, learning the language, and learning the systems that we're going to talk about. If you already are in ASFX, then you should have no issue following along. And if you do, rewatch the courses. I think a lot of people that I've been talking to recently have too much ego in their trading. Lose the ego. Be willing to always be a student and always be learning. How many times, I can't even tell you how many times I've told someone to go rewatch the course. They get mad at me because they think I'm insulting them, right? For some reason, to tell them to go redo something. It's insulting. But then they come back and they go, I completely missed something the first time. I'm so glad I watched it again. So lose the ego. That's my tip for you right there. Now we're talking about this 2-candle formation. The first thing that you have to notice is this TDI. It's been in the buy zone. Look at this. All the way back to Monday. This TDI has not dropped below a 50 value all week. So that's feeding the long ideas. And last night, it held the 50 EMA through midnight and into the start of the London session. So you have this changeover at around 1, 2 o'clock New York time from the Asian session into the London session. And that's where we see this start to break out. Why I like this 2-candle formation is because of its TDI value and the candle formation placement. Again, this is all explained in the courses and it's back tested. So you know that when this happens, not just this candle, but the TDI as well, they have to match up. But when they do, more times than not, it's going to work out in your favor. I'm going to show you more of these today. So notice also, we're going to come back to this, the next bar is bullish, meaning after your entry, so you enter on the close of this candle right here at 1:15 in the morning, notice the next bar is bullish. I put my entry a little bit above this candle because you got to give it some space for a spread, but notice the next candle is bullish. That's a good sign to stay in the trade and let it ride the 8 EMA. For me, I'm not awake at this time, so I don't take advantage of trades like this, but trading a JPY pair in the Asian session is totally acceptable, especially when you know it's GJ. Out of all the JPY pairs, right now, GJ has the gas. Like I just explained to you, it's been moving really well. ADR is almost 100 pips. 100 pips a day is a decent chunk of change. Now, of course, it can be higher. It could be way worse, too. So just keep in mind, if you're trading in the Asian session, CHF JPY is not going to move as much as GBP JPY. So that's the first one we're going to talk about. Now, let's transition to another GBP pair. This is Gcad. We're going to go back to yesterday, which was Wednesday. So overnight, if we're to look, I'm going to move my notes out of the way here. If we're to look at the movement overnight, you see it coming out of the Asian session, retesting the 50 EMA, and then shifting through the significant level at Monday's low here and Tuesday's low. So the low of week was set on Monday. It was bounced on Tuesday, bounced on Wednesday morning, but then broke Wednesday at about 7 a.m. New York time. Now, that's not where you're taking the entry. Like any significant level, you never want to trade on the first break, but you do want to trust horizontal levels more than you want to trust diagonal ones. So because this is a horizontal level and we break significantly with a strong bar, 8 and 21 cross, TDI in the sell zone, when we retest the 50 EMA, that's where I love to go in and look for D1 entries. Now, I never know in advance if I'm going to get the D1 or the A1 off the 50 EMA, so I'm looking for both, and that requires me to use the 1 minute. So if we go back on the 1 minute, you're going to be able to see here where the entry comes using the bearish divergence that I have drawn. So let me clear this up a little bit. There you can see the divergence labeled. You can see it moves lower, tries to come for a higher high, cannot. Instead, it's a lower high. That's where I look to take the entry as that TDI is falling over. Notice how that TDI holds the sell zone as price action moves lower. Now from there, you can see it falls about 46 pips, which is about 2R in the day, which is a pretty significant move. You take a 2R move on a Wednesday any day of the week. And notice it's still moving lower today, so you could have held a piece of the trade today and still been making money as it comes lower. But this is a basic D1 entry using 1 minute and 15-minute time frames. 1 minute shows you where the divergence is, 1 minute shows you where the risk is, and then it's just about measuring the potential reward. And if it's over 2R and it's not a terrible setup like this one isn't, then I'm going to be considering it for a trade. And notice again that super strong horizontal level from Monday, from Tuesday, from Wednesday morning, and then it's broken, retested, and we're moving off of it. It might be the 1.72 significant price level, but I don't want to say that because it actually looks a little bit higher than that. But it could just be the zone. Like it could be a whole zone here at 172. So that's Gcad on Wednesday. Now we'll transition GBP AUD, another GBP short idea. This one's on Monday. And this one's important because I want to really harp on my notes here and what the backtesting teaches us. So often I want to trade outside the Asian range. But this candle, this shift candle, it's an A1 entry. The shift candle happens inside the Asian range. So when we're shifting in the Asian range, you want to normally be cautious. However, through the backtesting, Jerome and I have proved that even if it's an overextended candle, as long as it doesn't break the Asian range with that extended candle, you could consider it for entry as an A1 shift candle. However, if it was to break the Asian range with this bar, then you would not consider it. It would be overextended to the point where you would think it can pull back. We only know that to be true through backtesting. There's no opinions there. It's through getting hundreds of markups of this scenario happening on different currency pairs, putting it into the spreadsheet and testing it to make sure it's profitable or not over time. So if you don't know how to backtest, or if you are struggling to find a strategy that actually works for you and aligns with your beliefs, you should consider checking out our brand new course. It's called Backtesting 101. Jerome and I put it together for you guys. And the spreadsheet that you get with it is honestly more valuable than anything else. You're going to learn how to backtest. You're going to learn why you need to backtest, how to forward test. All of that jargon is explained and visually shown to you in the course. But on top of that, like I said, you're getting this spreadsheet that you can take your questions that go into the system you're trading. You take those questions, put them into the spreadsheet, then get chart markups like I'm showing you here behind those questions, get a bunch of them, at least 100 of them, Jerome and I suggest, and then letting the spreadsheet automate that out, because we put in all these automatic functions, Jerome went crazy. That'll then tell you how profitable that system should be for you in the future. I hope that makes sense. And if it doesn't, click the link in the description, go to the Backtesting 101 page and watch my video there. You can find out more information and all of your questions should be answered. The feedback that we've gotten from that course already has been awesome. People are really just saying that it filling the gaps that they were missing from hearing all these people on social media like, oh yeah, you got to test your strategy, but no one explains how to do that. So that's what we did with the backtesting course. So I think you guys are really going to like it if you haven't already checked that out. Anyway, back to this shift candle. When you see the shift bar, TDI value rocks, sell zone looks good. The only issue here is that it's in the Asian range, but I know that this candle can carry. So I'm definitely going to mark this up. Your stop loss would go with the open price of this bar. And notice next 15 minutes, that little bar right there, that little hammer candle, it's bearish, which tells you stay in the trade. Stay in the trade. It's holding the 8 EMA. Stay in the trade. Stay in the trade. It never breaks the 8 EMA until 9:45 in the morning, 5 hours later. It's wild, right? It's almost a 100 pip move. It's 4R. So even though your stop is 23.8 pips, you're still getting 95 out of the move. So it's always about risk reward, and it's knowing which pairs can move this much. Is it worth risking this much on a pair like this? If you ask me, absolutely. Because if you look at ADR on this pair, let me see if I can find a more recent day here. It's 120. So to risk 23 on a pair that can move 120 makes so much sense to me if the entry signal is there like it is here. So let's flip from these GBP pairs. I want to show you Euro GBP, which is kind of like an inverse. Now this goes back actually to last week. This is the 23rd. I just wanted you to see this move off the 50 EMA created a decent risk reward setup that still moved 26 pips. It's 3R. So you don't have to go risk 23 to make 95. You can come on a slower pair, a pair that doesn't move as much, and you could risk 8 to make 26. Still good risk reward, still behind an A1 entry signal. This is what we would look for as like a candle formation. 2 candle, 3 candle, 4 candle, doesn't matter. What matters is the TDI value matches with the proper bar and that you can identify risk. And all of that is explained in the course. I don't want to give too much information away. I hope you guys can understand that because Look, people try to steal the course and post it and do all this other shit to me all the time. I have to give people the proprietary information in our private group when you pay to join. But here I'm trying to give you as much as I can so you can at least see that these systems are repeatable. If you watch this video, you could be like, oh, Austin's full of shit. These are just him marking up entries in hindsight. Well, if you go watch all my other trade recaps that I've posted over the last 2 years, you would probably change your mind. So I'm hoping it's just like me reinforcing my habits and my systems. So now we've talked about the A1 entries. I want to show you another D1. Here again, off the 50 EMA, TDI falling could definitely be better since it starts the day in the buy zone, but I really liked how price action was moving lower overnight. I really liked how the EMAs were in a downtrend. So in this situation, when you're waking up, if you're up early, 4:30, 5 o'clock in the morning, you're looking at this at the 50 EMA, and that's going to get you to think, well, I'm either going to look for a D1 or an A1. The D2 entry is a reversal entry. It has nothing to do with this setup. This is D1 or A1 only. So what you would do is go to the 1 minute. And we're going to pull that up on the side here. You see, I'm going to scroll back to the 22nd. Hold on. Don't need to go back that far because it's right here. Sorry. There we go. Let me sync this over. Perfect. So I'll show you what I was looking at. Again, we talked about this already, right? I'm looking at the divergence. It's got to be bearish here. We want the RSI falling. So you can see it right here from the RSI high right there. That's falling. When you match that on price, that's rising. Boom. That's divergence drawn on the bodies. That's divergence right there on the top. First break of the 50, not really interested in it. Second, really third break of the 50, here, I like it a lot more as the TDI is falling into the sell zone because I want that TDI to stay in the sell zone. That's going to keep me in the trade. And I now know my stop goes at the divergence high. Simple. I'm trading off the 50 EMA. That's that 1 minute 800 EMA. It's the same thing as the 15 minute 50. They're just different EMAs. And from there, you can see it moves lower all day as it holds this 15 minute in the sell zone. Oops. Holds that 15-minute L50 in the sell zone, and it drops almost to full ADR, 73 pips yesterday. It was slow. But the thing with this is that this is the only entry that I see. If you were to look for an A1 formation in here off the 21, I don't see it. I don't see this as an entry. I don't see this as an entry. I don't see this one as an entry because the TDI value isn't that good. And on top of that, with the swapping L50, you're going to get a choppier pair compared to GA that I just showed you, where GA had the L50 in the sell zone all day. That's going to be a much cleaner drop or rise, whichever way you're trading, because that L50, the yellow line, is in the same zone all day from the start of the day right here. That's what we've tested. That's a big piece of my system that I'm giving you guys right there. So let's go to the last one. I want to show you Euro AUD. Again, another swapping L50, swapping TDI, but it's rising. So it's leaning into longs. That's what it would think. This is a 3-candle A1 formation that you're looking at. When we get these formations, big rule is that that right leg needs to break the consolidation set back here. It does that. And the next bar needs to keep moving in the direction that I'm trading. So it needs to be bullish in this situation, and it is. What do? You leave it alone. Candle by candle, 15 minute by 15 minute. You just let it move. What does that do for you here? 5R, 55 pips, risking 10. It's a great trade. So this goes back to Monday on the 22nd here, right? That would be Monday. Where's that last week? No, that's last week. Excuse me, not Monday. Monday was the 26th. So yeah, that was the idea on Euro AUD that I wanted to show you. Now, I want to give you a couple more. Go to Euro JPY on the 1-hour chart here. Very interesting to me. You can go to this breakout bar. It's a 6 to 7 a.m. hourly candle. TDI is rising, as you can see, holding the buy zone coming into the day here on Tuesday. It breaks off the 21. TDI value is strong. That gives you a risk point of about 24 pips. If you were to hold that trade in today, it's up 147 pips from this breakout. That breaks for a new high of day. It breaks for a new high of week. TDI is in the buy zone. EMAs are in an uptrend. Space to move. That's a pretty easy setup, if you ask me. For the A1 entry, that's an A1. Now here's another 3-candle formation. TDI value is proper. 3-candle coming off the 21, kind of coming off the 50 as well. This is a quicker trade. It drops 2.5R in the same day, and then it ends up coming back to the entry price. And this is why trade management is so important. And that's another thing I teach in the courses. You can't just take the entry, leave the stop, leave the take profit, and walk away. What's going to happen is you're going to see your trade go up 2.5R, and because you don't do anything, you're going to end up getting stopped out or losing money on it. At best, you're just not going to make as much money as you should have made. So what I always recommend is that you grade the setup, A, B, or C. Then based on that grade, you exit the trade as it's moving for you or against you based on that letter grade. So if you give it an A, I don't close my A setups at 1R. But if I'm trading a C setup, I'm going to get out some of that trade at 1R. Think about it. Logically, it's a lower probability trade in the C setup. Why would I stay in it as long? Why would I give myself the opportunity to get chopped around? Only if you have an ego and you have to be right all the time would you do that. Otherwise, you're being robotic, you're being systematic, you grade the trade and you manage it according to the quality of it. Is it a great trade? Give it more space. Let it go to 2R because you graded it well. If you did your rules proper, give it the space to 2R, take some off there instead of 1R. That's a little insight into how I do that. And I have other videos on my channel where you can see me managing the trades live so you can see how that actually works. But that's all I have for the Forex ideas. So we talked about Bitcoin. We talked about SPY, all-time high again today, right under 420. And now you've seen how these entry signals can present on multiple time frames, the 15-minute for the A1, the 1 hour for the A1, and then the 15-minute and the 1 minute for the D1. So you can see how they kind of work together. It's not like the A1 is some crazy strategy with different indicators and a whole different thing compared to the D1. The A1 came first. That's what we teach in the beginner course. And then it evolved into the D1 and the D2. And without testing, it's all foo-foo. So because we have backtesting, because I can go back, take a picture of a markup like this, input the data into a spreadsheet and do that 100 times, that testing allows me to be confident to make these videos and share it with you guys and to put my money into it live when I see them present every week. So I'm hoping that by me doing these videos over and over and over again, I'm drilling it into your head why you need systems. Don't trade ASFX systems. I don't care. We have plenty of members. I'm very grateful. In a year, we gained 1,000 members. I'm super grateful for the team that we have. I don't need to convince anybody to join ASFX. Find a system that works for you, that aligns with your set of beliefs, backtest it. Maybe you join ASFX by just buying the backtesting course and that's the only thing you ever buy from us. Fine. Just test your system. Don't just throw money around in the market thinking you have a system. Test it. I can't tell you how many people I've asked, what's your testing? Like, tell me about your backtesting systems. Like, what do you do? Are you marking it up, putting it in folders, and what are you doing? Nobody's doing anything. So that's what prompted the backtesting course, and I think that's why a lot of traders struggle. They don't have this missing piece, which is the testing. You have all these cool trade ideas. I want to do 21 EMA versus 13 EMA. Test it. Get a bunch of markups. Find a set of rules that repeat, that you can ask those questions every single signal. Gather all those markups, put it into the spreadsheet, and let the spreadsheet tell you if it's profitable or not. Don't let your bias come in and sway a potential good strategy. Oh, I don't think that'll work. Can't do that. Or maybe you have a terrible strategy and your bias tells you that it does work. That happens very often. So you have to be able to see it from both sides. And I think the only way you can do that is by removing the emotion from the testing and using a spreadsheet. So if there's anything I can do to help you guys improve your testing, or if there's anything I can do to clarify the entry signals, just put a comment down below. And I'm just glad to be back. I'm glad I finished this video without coughing or sneezing. So I feel good. I'm not sure if I'm going to find a trade tomorrow. I should be up and trading. So we're back to normal now. If you guys have any questions, like I said, reach out to me. If you watch all the way through, comment. I'm drinking this peach LaCroix. Comment peach and the peach emoji if you can, if you watched all the way through. Thanks, everybody. I'm glad to be back, like I said, and I'll see you guys in the next video. Have a good rest of your week.